by Transforming Lives Through Real Estate. We acknowledge that real estate as an investment or as an operation affects people, whether that's helping them reach their financial goals as our investors, whether that's creating a phenomenal home for someone, not a place where they live, but a home, right? And a residence, a place where children grow up and children play.
Well, this is an honor and a pleasure to be back on the Real Estate Syndication Show. It's your guest host, Josh McCallum. Whitney, thank you for letting me be part of your community, one of the best in the business. Guys, you and I are honored to be part of the Real Estate Syndication Show, one of the most downloaded real estate shows in the world. And that's why we get the best guests. Today, it's Matt Faircloth Day. It's a national holiday. Matt Faircloth, who's sitting in front of me, is a good friend. He's also a famous syndicator. He wrote the book on raising private capital with bigger pockets. So many of us have heard him speak on numerous podcasts. We've also, hundreds and hundreds of us have invested with him at DeRosa Group. And he's going to share a lot about all that. And before we bring him out of the green room, because he's dying to get out of the green room, he's got so much energy. We are excited to remind you that the Omna Foundation, which is very close to my heart, but of course it was founded by Whitney, is about helping families be able to afford adoption and bring the children home, is doing a fundraiser at one of the resorts that we are part of. It's called Long Beach Island or LBI National. It's in New Jersey. It's on August 18th. You can still grab a ticket or donate because it's a double match. So if you donate on the website, go to accountableequity.com, hit one of the events, and you'll see August 18th, charity golf outing at LBI. And then we're following that by Learn and Grow on the 19th. You're welcome to everything. But that is one of the exciting things we're going to talk about today as we get to know what's going on in the world of multifamily with Matthew Faircloth.
Woo! Josh, it's been
Welcome to the big show.
Thank you. I appreciate you, Josh. And I have a pleasure to know you for the years that I have. And what's funny, Josh, is my book, Raising Private Capital, which was how you and I met.
That is how I met.
Read it, heard about it, and you were looking to assemble a juggernaut of a deal down there in South Jersey. You're one of your first forays and needed capital. And so you read a book from some dude from Bigger Pockets, probably saw it local from New Jersey. That book, Josh, is celebrating its 5-year anniversary. So that means I've known you for 5 years now, brother. And all the great
what
stuff
a great
you and I have done
landmark
together. Yeah.
Plus your birthday, I believe, is my anniversary date, October 4th.
October 4th, 10-4.
Yeah. And
by the way,
brother,
that's the only Matt Faircloth day, maybe in my family or whatever, is October 4th. And it's not even a holiday in my home. but I just want to acknowledge you that you and our friendship has gone back many years. And if I may, Josh, step away from the microphone just for a second and show you something I'm super proud of.
Oh boy, guys, you're going to have to watch this on YouTube because Matt is now
you guys
getting
have to just watch the digital version.
Yeah,
watch on YouTube. The Raising Private Capital has a new version. It's a revised edition, Josh, a second edition of the book. And how lucky am I that I got the opportunity to write this with Bigger Pockets again. So a revised edition is out. It has more chapters written by me, and it has a incredible introduction written by my new friend Pace Morby, who is an absolute force of nature, a phenomenal human being, very giving, and I'm very grateful that he was willing to do that for me and write that.
Congratulations. That guy came out of nowhere. I've heard his name now a dozen times in the last 2 months. I did not know about that gentleman. But this show's not about Pace. It's about Matt Faircloth.
Yeah.
No, I'm honored by that. I'm glad you went out and got another colleague.
That book brought you and I together, and that's one of the first things that the writing that book has been an absolute journey for me, and what it created for me and for many others once I wrote it has been incredible. And not that, just one more thing about Pace Morby, he attributes a lot of his success and his ability to raise capital in the very beginning stages of his business to some principles that came out in the book. Right. So good.
Wow.
But the book also brought you and I together. That book brought many, many people that you and I now call colleagues and friends together, because it's what's great about writing a book is it is a great way to get your message, your context, and things you stand for out into the world. And people that are aligned with that, you read the book and they become, they can find you easily. It's a great business card.
Let me tee you up to some easy softballs that are some principles from that book. And if you guys are listening, this is the Raising Private Capital book release. That's what this is. Second second edition. That's one of the
Second
key
release
things.
party. Here we
Second
go.
release party.
Right.
Two big things I took away from that book. One is that you're fundamentally convinced, and you have demonstrated it by your life, that raising private equity and letting people get involved in these kind of direct asset deals can transform lives through real estate. As a matter of fact, I
Yes.
see it over your head.
Mhm.
It's something the DeRosa Group stands for. And I want to just let you talk about that, because that definitely was
Yeah,
unique in this
sure.
book. And then later I'll tell you about the second one that I want you to talk.
I like that phrase so much, I trademarked it. It is one of the reasons why I'm proud to say that I'm aligned with you and your Viva May values and that, because I think that you and I both as business owners acknowledge that what we do as business owners makes an effect on people's lives. So if I
Mhm.
come and stay at a hotel that's managed under Viva May values, I feel at home. I feel like I'm taken care of. I feel, if I dare say, I feel loved, right? Then it makes me feel better as a human by experiencing those values. Just like if I live at a DeRosa property, it's our goal to convey that as well by transforming lives through real estate. We acknowledge that real estate as an investment or as an operation affects people, whether that's helping them reach their financial goals as our investors, whether that's creating a phenomenal home for someone, not a place where they live, but a home, right? And a residence, a place where children grow up and children play. There are multiple properties, Josh, that we purchased that it was one we found a heroin needle out in this open
Oh,
field. And we were able to, right where that heroin needle was found, I put a playground. That was after much stabilization, removing any of the heroin element or whatever, made sure there's no other heroin needles out there. But then right where we found it, years later, after a lot of stabilization, there were families and children playing and families barbecuing and stuff like that. That is transforming lives through the efforts that I can do. I can take the families that have to live in a place because it's affordable or whatever.
yep.
I can take that same family without having to boot them out or whatever. I can give them a better lifestyle and a leg up, in a place that they're proud to call home with
I'm
community gardens and all that.
so glad you brought that up. By the way, what a
Mhm.
visual. I'm so glad you made a joke about how there are no more needles, because it sounded
No,
funny. I was going to say
yeah,
much remediation.
a
Um,
lot. Yeah.
the truth
We
is it's a two-sided equation you're describing there. The investors, of course, need to earn that living on their
Mhm.
interest, on their yield, I should say. But also the families you're serving are one of your primary constituents. And the better you can make their life, the better the
Yeah.
asset stabilizes, the better it helps the investor. They call that a virtuous circle. As a
Mhm.
matter of fact, I noticed at DeRosa Group, one of their emblems behind your shoulder is round. So kind of
Yeah.
virtuous circle.
Yeah,
I
it
love it.
is. Yeah, thank you.
And I remember
Um,
mentioning my first visit to you, I mentioned I watched you give that speech in a YouTube video while you were driving to one of your properties, and I could tell you meant it. It's
mhm.
not words, it's not lip service. You trademarked it.
Yeah. I was gonna say transforming lives through real estate meant so much to me that I trademarked it. That I said, "This is something it's such a great testament statement to who we are that we wouldn't put a TM on that." If you see other people using that phrase, tell them they owe me $1.
We're
Yeah.
gonna sue 'em. Just kidding.
Yeah, right. Yeah. No,
The
it's just something that it's a embodiment of what we stand for, and I think that there's a lot more work that we have to do helping people make money while they make a difference.
Oh, I love that. So the second
Yeah.
principle in that book that I would call not necessarily revolutionary, but super lightning rod experience when I read your book is this idea of there's two sides of the capital equation.
Mhm.
So much it impacted me that Capital Hacking, the show I get to host, took it and said human capital meets financial capital. They're both needed. And that was
Love it.
something you made very clear in your book, that we need our capital partners, and thank God they need us too. It's a fair trade. And you always talked about that.
And it probably was a journey I had to go through on my own when I first started raising money because at first you almost can't help it, but you kind of feel like Oliver Twist, please, sir, can I have some more kind of thing where it's like, yeah, you feel like you're begging your investor, please, could you please invest in this project for me? And it's like, actually, no, I'm offering you a phenomenal opportunity you can't get anywhere else. And I'm going to work my tail off until you make a great return on your money. And no, you can't get anything like this off Wall Street or off of some other venue or vehicle. What I offer you is unique because I'm also offering you my knowledge, my know-how, my market research, my data, my inside scoop that I have on deals and all that stuff. That's you're investing in that and also
Exactly.
this physical asset. So yes, these are equal what the deal provider and what the cash provider bring to the table. The deal provider brings all those things and time, right? Where the cash provider brings their hard-earned dollars, and those things are equal in a lot of senses in the equation. And that was a big light bulb for me. And a lot of people have told me that have read the book that they gave them a lot of courage to go out
Yes.
there and say, "Hey, wait a minute, you're right. I'm not asking people for a favor. I'm offering them an opportunity, and it's a win-win. And
It
I
is.
win, and they win, and I have just as much of a right to make money as they do, in what I bring to the table."
I love it.
Yeah.
So shifting gears, you not only I think it's in the millions and millions sold, right? I mean, that is a very popular book, thank God.
Yeah.
And most people can't say that about business books. Most people make
I
a
wish
business
it had
book.
sold millions of copies, Josh. It's this is a lot for books, just so you know, because it's not like it's Harry Potter or anything, but it sold about 55,000
Okay,
copies,
sorry,
which for
50,000,
education
thousands and
how-to books,
thousands, I should have
that
said.
is quite a bit. That is quite a bit of copies for education how-to books. But
It really is if you think
yeah,
about it. So back to the next part of our show, Matt,
yeah,
because you've been living it, breathing it. I even saw you back in the old days. You would do a lot of meetups. You were always a great teacher. I know you've done a lot with the DeRosa Group to educate. What's going
yes.
on in the world of education and the connection? What's DeRosa doing in that world right now?
Yeah, well, we want to continue to propagate and help people that want to help others make money while they make a difference too, right? There's only been so many deals I can touch, but if folks are looking to if they subscribe to those mantras that I put out there, if they believe that there is an equality in cash providers and deal providers, if they believe that real estate investors really can make a difference in the world through the work that we do while they run for-profit companies, then we want to help them get there and that. So we offer very unique education programs through our company. We have a mastermind that's been thriving. We have a Bigger Pockets boot camp that I'm lucky enough to teach with my friends at Bigger Pockets about once a quarter. We have a new boot camp cohort that launches.
Mm.
Taught thousands of students through that program as well. And it's a lot of it's centered, Josh, on the concept that there are 4 different personality traits that are necessary in real estate investing. There are those that are like the money slash magnet of the company, and that's people like myself and you that are there to attract eyeballs and attention to our company so that these people that are aligned with our brand and aligned with our mission can do business and we can help them get where they want to go and they can help us too, right? But then there's also those that find the opportunities. There are those that
That's right.
underwrite and analyze the opportunities, and there are those that drive those opportunities to success, all of which require different personality skills. And so we developed it's a concept I believe in so much, Josh. I developed a personality assessment around it. That is a free personality assessment that people can take by going to derosagroup.com/superpower. Just like a superhero, if you're watching on YouTube, you see I have
That's
a
excellent.
superhero junkie. So go to derosagroup.com/superpower, and you can take a free personality assessment. Could take upwards of 5 to 10 minutes for you to take, and it'll tell you which of those 4 quadrants you live in: finding deals, underwriting deals, finding money, or driving deals to completion. And there are very different traits that it takes to be each of those. And I think too many real estate investors, Josh, think that they have to do all 4. I cannot tell you how often that I would scrutinize myself because I wasn't that good at analyzing. I didn't live in an Excel spreadsheet for hours like other people that I knew could. And so I was like, man, I just need to get better at Excel. And so if you're telling yourself that, or I just don't want to raise money from people, I wish I knew how to be a better salesperson, or I'm not, contractors walk all over me and so do my tenants. I wish I didn't have to be so, tough and mean to people or whatever to get what I want to get done. Or I wish I didn't have to negotiate or get out there and press the flesh and make my name out, to get my name
Yeah.
out there so I can get deals. Well, the truth of the matter is, Josh, you don't have to do any of those things. You can pick one, and I can promise you there's one thing that you're great at of all those 4. And if you expand into that, then you can build a phenomenal team around you of people that can do the other stuff that you can't.
Boom. That was worth the entire price of admission for this podcast because I'm going to summarize them again. Magnet to attract the capital. Find the deals is a whole different skill, by the way. People do
That's
skip
called the
over that.
hunter, by the way.
Hunter.
The
That is
hunter.
so good. And
There's
then
the money,
underwrite it.
the hunter. That's the brain. Is that let that go to their brain, but they're really the one that developed the business plan. That they create the roadmap for people like you and I to walk on, right? That's the brain. And the last one is my favorite one. That's called the Hammer, and that's the Justin Fraser of the world, who's there to put the deal in a headlock and squeeze it out and squeeze out success out of it. When they're dealing with the problems, they're the ones that are used to playing whack-a-mole, if you will, and they deal with contractors, property managers, and they're the technical term for them is the asset manager, but they are also the problem solver and the captain of the ship in a lot of ways.
Yeah. Wor Definitely worth it. And so if I go to your site, derosagroup.com/superpower,
Mhm.
are you what almost feels like you could do with that data is you could help us coordinate where we meet each other. You know what
Mhm.
I mean?
Yes.
You could almost create help us create a boy band as they used to.
Yeah. Well, we've already done that. We've had people that met on the Bigger Pockets boot camp, took that assessment, realized what they were great at and what they should be doing, what they shouldn't be doing. We helped them see gaps in their team, and they went and filled in those gaps through the boot camp and put a deal under put a 104 unit under contract in San Antonio, Texas.
Congratulations. See,
Yeah.
that's making it happen in real action.
We've talked about like a matchmaker, like
Yeah.
a match.com of real estate
You
investing or
should
whatever.
actually.
Yeah, yeah.
Keep going with
We
that
maybe
strategy.
will.
You know why? Because for guys like us, for me right now, we've obviously got so many staff at the property level, but at
Mhm.
accountable equity, I have to keep it kind of lean, and I'm always looking for all four of those gaps.
Yep.
Who's out helping me find the deals? You tend to do that one outsourced sometimes, but
Mhm.
then you still got to analyze them in house, and then you still need to run them once you own them. So now let's shift gears for a minute. Tell us where you're seeing the future of the deals and where are the deals you're finding now, or
Mhm.
what is your current strategy at DeRosa Group?
Well, we're seeing more and more distress coming into the market. I'm not a doomsday predictor that like the bottom's about to fall out, Chicken Little, the sky's falling kind of thing. And so I don't think that multifamily valuations are going to get cut in half because it's just not there. Multifamily is too needed in our country. It's too necessary of an asset class. It's not something that people are going to all of a sudden walk away from. So multifamily, I believe, is going to hold its value. But I think that those that keep their ear to the ground, that are disciplined on the markets they're shopping in, are going to start seeing more opportunities come up. That said, you're not going to cap rates are not going to go to 8, 9%. It's not going to get it's not going to get easy, Josh. Okay. And that investing is not going to get easy. The hard part is going to be becoming the one whose phone rings when one of those opportunities comes up. And so what I think we're going to see more of is, and we just saw this for the first time, a seller is selling a property for less than what they paid for it, Josh,
Mm,
18 months ago. So they bought it, went in undercapitalized, not enough money, burned through their money. They're out of money and they're trying to sell it just so they can save a little bit of face, maybe save maybe about half the equity they have in the deal. And it's on the market now for a good bit less than what they paid for it. They're willing to take it at a loss. That said, that deal is not going to stay on the market very long. It's only being marketed to a few people, but it's not a mass offering. That's not on LoopNet or anything like that. The broker took it to a few operators that they knew could close. And so the way that you're going to get successful, if you're listening to this now and you want to be in the know and make your phone ring when there are distressed deals like that that come onto the market, my advice to you is to pick a market, not 10, not 30 markets. And by the way, truth is a state is not a market. So if you're don't be telling me you're investing in Florida or you're investing in Texas. Pick Orlando or Tampa or Miami or one of the markets in the state, right? Then go and infiltrate that market and get to know all the brokers or whatever. Make sure they know you're serious. Make sure they know you can
yeah.
close. Take the brokers seriously and they'll take you seriously. And then when these distressed opportunities come up that need to close quickly with no BS, no retrades, no
Yeah.
look a gift horse in the mouth, right? Then you'll be the first to know. And I think that that is where great deals are going to get made is through relationships and uber focus on specific markets.
May I ask you a question about that? So
Please,
in that challenging deal that the person's going to let it go at a discount
less
in a
than what they
sense,
paid. Yeah.
how how will it get financed? What's the difference between financing that deal today than a different experience
So
in time?
for that deal, there's ways that you can slice it up, right? It's well under 90% occupancy. So you can go in under bridge debt, but that's going to be pretty much equivalent to hard money,
Yeah.
like 10, 11, 12%. The creative way to do it, and this is what we're looking to do, is to buy the LLC. So when I do that, I inherit everything that LLC has attached to it, including debt on the property.
Yeah.
So what we would do in that scenario, and what we're discussing doing with the broker and with the owner, is to buy the LLC. The general partner would probably get nothing in that transaction. We're going to offer to every investor in the deal. So we would inherit. I'm trying to inside baseball. I'm trying to inherit the investors and the debt. And so I want to go to the debt and say, hey, I'm going, a new sheriff in town. I can fix this. Give me a little bit of runway. And that so the debt on that property expires in about 8 months. I'm going to negotiate, and I've already talked to the lender once, and they're open to conversations. A little shaky, but I want to extend the debt out for probably
Great.
another 10 months beyond. So I want an 18-month runway on debt, right, to get in and fix it. The investors, I've not spoken to any investors yet, but the position to them would be, you can either stay in the deal, keep your equity in, and my goal is going to be to get your money back plus that and optimize it beyond. Or you can take a buyout right now. Your buyout is going to be a fraction of what you put in, because right now we're just not valued for what it was when you bought it. So maybe you're looking at 50 cents on the dollar in getting out. If you want to get liquid and move on, fine. But you can also just stay in, and your principal, your capital balance stays what it is. The next thing with the investors we're discussing with our lawyer, Josh, is we want to remove this current owner owes those investors quite a bit of preferred return backlog that they haven't been able to service. So I need the preferred return to go away. Just investors just become straight common equity for whatever the deal's worth. They get a piece of that and that. But you got to give me some breathing room. I don't want to have this pile up of
No, that's
preferred
smart.
return that we owe to investors. And then we'll have to raise some new equity to come in to give us some construction dollars and that. So those investors may have to make some room for new equity to come in. And as I said, the general partner is likely going to just, what they
Right.
get is they get a deal they were a guarantor on to go away. And they
Oh,
probably
yeah,
aren't going to get a check.
that's worth gold.
Yeah.
Let's hit pause on this story, and if you're in the world of investing as a sponsor, rewind probably 2 minutes and listen to that 10 times. Matt, that was a masterful strategy,
Thank you.
and I hope that strategy works out for you and the investors win. Okay, the
Yeah.
investors, they understand that deals
Mhm.
can go bad. It's not that this property is maybe terrible. Maybe the property's actually okay. Maybe the
Everybody wins.
execution,
Yeah.
it could be kept whole if that works out the way you hope.
The
And
GP doesn't have to
that's a
call
great
himself a
idea.
failure. The GP doesn't have a bankruptcy or a property that got taken back through receivership. They can say that they've got a clean track record, and they can go and try again, or they can go try a different industry. They can get out without having to owe people a lot of money. The investors have someone else captaining their ship. The bank also, truth, guys, newsflash, banks don't want to take properties back.
No, that's
Josh and
true.
I both have bought properties from banks, and the banks always are like, take it. I don't want this anymore, right? Josh, God bless him, bought a winery at one point from a bank, and I'm sure the bank did not run that winery very well. The banks are not good at running these things, and they know they're not. So the last thing the bank wants is to take these assets back. And if I can show them, hey, listen, we have a proven track record, we'll get you paid back, and we'll keep making monthly payments to you. We'll keep you serviced, but I need you to not have this thing expire a couple months from now. I need you to give me some leg room and some breathing room so I can get you paid back, right? That's the conversation we're negotiating. But there's a lot of moving parts. There's a lot of undoing that needs to get undone. But you're right, Josh. I hope people listen to that again and again, because it is a strategy that I think is a win across the board. And if you're willing to kind of having that coming to Jesus meeting with everybody about, listen, this is how it's going to go. This is how I can help. We're going to close. We're going to make it right. But everybody needs to maybe be a little bit more patient and collaborate together. And most importantly, the GP needs to drop their ego and maybe try again somewhere else. But at least they're out and they can go
Yeah,
like this
no,
without worrying about big
it's a miracle.
obligations. Yeah.
Yeah, we could call that the DeRosa method. I think you should
Thank you.
realize that that method is a really unique. There's other types of methods out there where there's these raiders that are going to come in and they're going to
Mhm.
wipe out everybody's. Don't worry about the preference. They're going to wipe out every bit of capital invested. They're just going to wipe it out. They still might buy your strategy of buying the LLC just to get the guy. They may do all that just so the dude or the lady can not have their personal guarantee destroyed.
Yeah.
Might go after in lawsuits. So they'll just unwind the whole thing and nobody gets anything. So
No,
there's
that's
that
what the
raider
GP's chasing.
strategy.
Yeah.
or they're just going to go bankrupt. The GP could go bankrupt, and then nobody gets anything, and everybody's in lawsuits, and it's all.
And the bank gets the property back, which they don't want. Right. That's the thing, is that, like, do you want to go to
Great
lose,
win-win.
where everybody loses, even the tenants lose? Because as Josh and I have seen, remember what I said, banks don't run properties well. So when the bank takes over, they're not going, those tenants are going to get a subpar place to live as well. So should everybody lose, or can we all just kind of maybe let what we thought was going to happen go and accept the fact that this is a way that we can all win together?
I think that is priceless. So on that note, as we wrap up here, I want to make sure you're share how people can reach back out to you, Matt, because
Sure.
I'm looking at your handle. Is it at Matt Faircloth on all the different social
It's
medias?
at the Matt Faircloth. Yeah, at the
the
Matt Faircloth. Yeah. Well, there's other Matt Faircloths out there, Josh. So I had to go the Matt Faircloth to make it stand out, right? They can look up at the Matt Faircloth on Instagram. They can, of course, follow me there. They can learn about our company at DeRosaGroup.com. You guys want to hear more about how we do what we do? You guys want to consider our mastermind program or other mentoring outfits that we have? Love to have you guys join our student base. I can get a little more sleeves rolled up and help you guys with, like you said, but apparently Josh is branding it the DeRosa method. And that. So if you guys want to hear more about that as well, or even want to join our passive investor community, DeRosaGroup.com, DEROSA, DeRosaGroup.com is our website.
It's awesome, buddy. Can't wait to follow up with you. Thank you for sharing all those great stories, especially the DeRosa method.
Yeah. And Josh, I want to personally acknowledge you for jumping in with Whitney on this very noble cause of helping children of adoption get into great homes for folks, for families that will love them and teach them the ways of the world and everything like that. I am a child of adoption myself, and I want to just thank you for what you and Whitney are doing to help all the adoption of the adopted kids and the kids in foster homes and kids looking for a home all around this country find that stable home that can just love them and teach them and be a home for them and give them birthday parties and Christmas mornings and stuff like that. I mean, I've heard stories of kids that are 5, 6 years old that have never had a birthday party, Josh. And that. So I did. This is the great work that you guys are doing. And I just want to thank you from my heart, from me personally, for a matter that I'm very personally attached to. Thank you.
Thank you for saying all that. And please, everybody, there's going to be like 2 different matching donations for every dollar that we raise. So $1 becomes $3. It's exciting. There's all accredited investors are coming. So it's a lot of wins, win-win. You and I like the triple wins. God bless you guys. Have a lovely day. Matt, thanks so much.
Thank you.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.